Hi, I'm Ant Joblin and this is Smart Money, the show where we lift the lid on the hedge fund world to show you where the masters of the universe are buying and selling. Today we're looking at the insider dealings of Masimo Corporation, a global medical technology company that develops and manufactures a wide array of innovative, non-invasive patient monitoring technologies. Masimo products help clinicians monitor over 1 million patients in healthcare settings around the world and provide pulse oximeter technology for use by the top hospitals. Masimo view themselves as a private garage startup company that has grown to have a market cap of $9.8 billion, annual sales of $937 million, and net income of $196 million. Now, usually we take a look at insider purchases. Instead, today, with the market in such unpredictable territory, we're going to have a look at an insider sale. Joe Kiani, CEO and board member of Masimo, has been gradually selling equity in Masimo since early March. But even with the stock rebounding to trade at all-time highs, Kiani has sold a further 134,000 shares in April for an average price of $185.37. That's a $24.86 million disinvestment from a company trading at all-time highs. Kiani remains the largest individual shareholder in the firm, with a remaining holding of just under 160,000 shares worth $29.5 million. Masimo's ratios are a really encouraging read, and just maybe these sales are an indication of insiders expecting a further sell-off. Masimo has a return on assets of 14.05%, which is among the best returns of the industry. The firm outperforms 94% of its industry peers, which average minus 11.32%. Their return on equity of 16.08% also beats the industry average of 11.07%. Their 20.92% profit margin is impressive too, and among the best returns in the sector, outperforming 93% of its industry peers. When looking at valuation, Masimo's price-to-book ratio of 8.47 suggests that the firm is valued correctly. However, the price-to-earnings ratio of 57.58 indicates it is overvalued. This is supported when looking at its industry peers, which average 27.38. The forward price-to-earnings ratio of 52.23 indicates the price is a bit too high too. Massimo shows quite strong growth in earnings per share, growing by 19.89% yearly when measured over the past 5 years. Based on estimates for the next 2 years, Masimo will show a quite strong growth in earnings per share, 11.18% on average per year. The firm's revenue has been growing slightly by 9.27% in the past year and has averaged 9.84% over the past 5 years. A current ratio of 5.78 and a quick ratio of 5.11 both indicate that Masimo has no problem at all paying its short-term obligations. Both these readings significantly beat their industry peers. Looking to the technicals, both the long and short-term trends are positive, and when comparing the yearly performance of all stocks, Masimo is one of the better performing stocks in the market, outperforming 96% of all stocks. On top of that, MASI also shows a nice and consistent pattern of rising prices over a multi-year period. Masimo is currently trading near its 52-week high, which is a good sign because the S&P 500 certainly isn't. Now, this might look like an excellent stock to buy, but the fact that the CEO is selling is even more reason to conduct your own due diligence before making any investment decisions. That's all for this week. See you next time.